Good afternoon, this is Sean Golden with Golden & Golden, here to go through the basics of foreign account compliance for matters such as Fbar, Fatca, PFIC, what you could do to get into compliance if you're already out of compliance. There's a ton of horrible information online. I mean, a lot of it's inaccurate, a lot of it's outdated, a lot of it is designed just to scare you unnecessarily because, quite frankly, a majority of the time taxpayers are non-willful, and there's various safe programs developed by the IRS to help you safely get into compliance. So let's go through some of the basics. When someone's talking about foreign accounts compliance, basically three main form/categories. There's the Fbar, Foreign Bank and Financial Account Reporting, which is on FinCEN Form 114, technically not a tax form, but enforced by the IRS. Then there's Fatca, the Foreign Account Tax Compliance Act. Individuals and other filers file it on a Form 8938. And then there's the PFIC, which is the Passive Foreign Investment Company, which is filed on Form 8621. There's other forms, the 5471, which is for foreign corporations, the 8865, which is for foreign partnerships, but our focus today is accounts, and while your foreign business or partnership or other joint venture or entity may have accounts or assets that have to be reported, we're just focusing primarily on individuals who have certain foreign account compliance reporting requirements. So let's start with the Fbar. The Fbar is used to report foreign bank and financial accounts. Don't let that name throw you off. Many people see it and they just think bank accounts. But it means investment accounts. Bank accounts, investment accounts such as mutual fund accounts, stock accounts, certain foreign life insurance and foreign pension and things of that nature. The Fbar is relatively straightforward in the sense that it only requires the maximum account value. If you don't have it, you can mark, I think it's maximum account value unknown, but it doesn't delve much further into it than that. Form 8938 is newer. It was introduced in 2012, I believe, on the 2011 tax return, and it also requires the maximum account or asset value, but it's a little more detailed. It includes more than just accounts. It also includes assets. For example, if you own stock certificates individually, those would be reported on Form 8938, which, unless it was in a stock account, it wouldn't be. Individual certificates, for example, wouldn't be reported on the Fbar. But on the Form 8938, in addition, you also have to include, do you have capital gain, interest, royalty, dividends, and how much and where it is on the tax return. So it's a little more in detail. It also asks some more specific questions, such as if there was a tax implication with this specific asset or account being reported, is it jointly owned, things of that nature. PFIC, Passive Foreign Investment Company, for purposes of individuals, typically it's going to include pooled funds such as mutual funds, ETFs, and things like that. If you have a foreign company like a BVI, Hong Kong Private Limited, it's a much deeper dive. But for this scenario, you would file normally a Form 8621 to report, like a mutual fund, the units, the value, if you made an election, things like that. Now, if you have excess distribution, it gets infinitely more complicated, but unless you're there, it's not that bad. There are some exceptions to following that form, such as if there is a treaty and it's in a pension, or sometimes if it's under 25 or 50,000, but the regulation sort of conflicts with the instructions. But these are your three main forms: Fbar, which is FinCEN Form 114, Form 8938, which is Fatca, and PFIC, which is Form 8621. It's important to be in compliance, not because the fuzz is going to show up to your house and arrest you, not because you're going to get all your property seized, but because enforcement is on the rise and the penalties can be intense. Fbar penalties can be 50% of the maximum account value if you're willful. If you've got $3 million saved overseas, maybe you have a numbered account in Switzerland or some accounts in Hang Seng in Hong Kong or Bank of China in Australia. Just having the accounts, it's relatively simple to get into compliance, but if you get caught, for example, before you get a chance to do that, the penalties can be intense, and enforcement is on the rise with Fatca. More than 110 foreign countries and hundreds of thousands of foreign financial institutions automatically exchange information with the U.S. government, providing U.S. persons who have foreign accounts to the U.S. government. Audits and examinations can be tough because oftentimes taxpayers can get uncomfortable, especially if it's a sensitive audit such as an eggshell or a reverse eggshell. In those kind of situations, if you kind of double down and lie to the IRS, you could very well end up on the receiving end of a criminal investigation by way of the special agents. In addition, once the penalties are issued, they're more difficult to get removed or abated versus if you avoid the penalties, which leads us to the various disclosure programs. If you're out of compliance, there's various programs that you can submit to in order to get into compliance. If you're willful, you know who you are, right? Or you just can't certify under penalty of perjury that you're non-willful, well, there's a program for you too. It's called the Irs Voluntary Disclosure Program. There used to be an offshoot, which is OVDP, specifically for offshore. Now it's all kind of wrapped into one program. It's for people who are willful. So don't let anyone tell you if you're willful you're going to jail, because that's not necessarily the case. If you're non-willful, there's a lot more opportunities available to you. There are the streamlined procedures, there are the delinquency procedures, and reasonable cause. We have lots of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.